Hello, everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacino. How's everyone doing? Hopefully, this goes smoothly this morning. It's been one of those technical, challenging mornings. Good morning, Patrick. Not with the computer either, with pretty much everything. Good morning, Heinrich. Good morning, Connor. When can we get a look at Walgreens? We can hopefully get that in. Royal Palms, good morning. But you have to say good morning first if you're going to make a request. Hello, Eric. Again, hope everyone's doing fantastic. Sell off continued. We had the mortgage stuff out this morning. Redbook. I didn't see anything on Barkin speaking. I didn't see anything on that. I might have missed it. It's, again, trying to get to yesterday. The podcast, Futures Ed podcast, which I've been trying to post since last night, should finally be processing now. It's with Doomberg, so if anybody's interested in that. Then the next one, there's a couple guests on, including me, so that one will be posted next in the next few days. So you won't want to miss me, of course. Unless you're sick of me, then you will want to miss me. But still watch Futures Ed, at least for the other guest. Redbook coming in 5.6. Strong print in Redbook still. So, good morning, Christoph. Haven't seen you in a while. Good morning, Tony. So, thank you everybody for continuing to tune in. What else? We got the ISM manufacturing. By the way, the S&P Global Manufacturing came in pretty weak yesterday, below consensus and forecast 47.9, which is a pretty weak reading. Let's see how the ISM numbers come in. It's forecast to be 47.1 to 47.3, somewhere in there. Previous was 46. Anything below 50 is still in contraction, so that's a critical number. But also watch to see if manufacturing prices jumps back over 50. Keep an eye on that sub little part of the ISM number. Then you have the JOLTS numbers also at 9 a.m., so 30 minutes after open. I always cite things in Central Time in case people are wondering. And then this afternoon at 1 p.m. Central, 2 p.m. Eastern, FOMC minutes from the December meeting. So stuff's picking up today and then keeps getting busier Thursday and Friday. Friday being non-farm payrolls. Good morning, Options 22. Are you back at home or are you still traveling the world? Oh, sorry, I was just joking anyways, Royal Palms. You know, I got to say some things. Thanks for saying good morning. Been busy with real estate, starting to dabble with e-minis. How you been? I've been okay. Been okay hanging in there. Or if you're not even doing e-minis, do e-micro. I mean, do the micro contract of the S&P to start off with. Really inexpensive to trade. You can use good stops. It's halfway liquid, so you know you're good to go. XLU, XLP going to be outperforming sectors for 2024. There you go. Connor's predictions. Good morning, Anissa. What else? All right. Pretty red market map. Again, telecom is up today. Healthcare is up. Consumer defensive. So sort of a rotation into some more defensive stuff this morning. Mega caps still taking it. Apple with the gap down yesterday. Lowest close since mid-November. So keep an eye on that. That means everybody who's bought since about mid-November is underwater now in Apple. Also, NVIDIA confirmed but did not officially trigger on a daily. It did not officially trigger the double, the mini double, but keep an eye on that too. Groups, let's just do a quick little refresh. Yeah, healthcare, consumer defensive, still leading. Technology, basic materials, consumer cyclical pulling back. Fed watch still has in 6 rate cuts starting in March. Nothing's changed there. Fear and greed. We're barely hanging on to extreme greed. Barely by the hair of our chinny chin chins. So we'll keep an eye on that. Earnings. You were asking Royal Palms about Walgreens Boot Alliance. That is tomorrow morning. Nothing much today. I mean, really nothing much. Walgreens Boot Alliance and Constellation Brands on Friday before the open are the only thing I'm really keeping an eye on. Very light earnings week. to kick off the new year. All right. Good morning, Alan. Thank you for tuning in. Happy New Year. Hello, Christoph. I think regional banks look like good relative value. Could be interesting watch. Also, when the Fed program expires in March, unless they renew it, when they put it back in place from last March with the mini regional banking crisis. My man says the market is oversold. Not quite yet, but do we have any potential bottoming pattern? Still hanging on. We do have a potential mini double. We do have a potential mini double. If we continue to trade much lower, that will be off the table. So going to be watching that. But, this is where, all right, this is where I will be watching also. I've gone over to percent B stuff, front run pattern. If this turns into a percent B buy in a 4-hour bar, I'd be watching its high. That's where I could look for a front run pattern, but you got to be real nimble in market conditions like this. On the 4-hour, yes, we are oversold in my book. On the daily, we are not yet. We still have the magnet price of 47.55.50. The only thing that gets me short term, besides micro patterns, which are more scalpy things, the only thing that makes me watch for a continued bounce now is that close above 47.90.75, so 47.91. Other than that, it would just have to be micro patterns. The next key level for any bullish plays, next key level 47.55.50. Also, if you're looking for the little key levels lower, the next one would be 47.59.25, which would invalidate the double, and then 47.55.50. Below that, we're looking at about 47.50 to 47.51, and then this is going to be a very lopsided double, so it's not really correct, but since it's going into a clear path move, I'm still going to use at least these targets for taking some kind of action. I'd be using these targets for either stop lowering or still potentially taking profits off on any short positions. Lower, because of the clear path move. It is very lopsided double. You can see it right here. It's got it's not anywhere near the center, and it's overextended. Now, this may never trigger because we're coming into the bottom of the rotation zone, so keep that in mind. We're not yet at cycle bottoms on the daily. Also remember, on a weekly, we're finally dropping out, and on a weekly, just to return to the weekly rotation zone, 46.87 area, just to tap it. Okay? And that would potentially only wipe out the last 3 weeks if we did that. Not even 3 weeks. So, would I be getting aggressively to the long side yet? No, not from my perspective, unless like this remains a double and still triggers. And then it could be starting to bounce back. But we still have cycles rolling over. We still have some downward pressure. We also have, real quick, dollar index climbing. I'm jumping to this because we're getting to a topping area, but not yet overbought. Getting into a key resistance area. So I'm watching today how it reacts up here. But if it does not pause up here, there's still a gap left behind until about 102. What is it? 102.53, 54 area. Remember, dollar index also, this could be setting a new longer term, well, I'll say a more medium term bottom potentially. Does that mean we won't react and get some pullbacks? I think we will get some pullbacks, but those pullbacks I will be watching for any buy setups. So I'm keeping an eye on this, and this could keep putting some pressure on the market. That's why I'm bringing that up next. NASDAQ. We had a potential double. It's not in play anymore. Not in play. Still, I'd be looking at this 16,735 area. Okay, 16,735. I'd be watching for possibly a more substantial bounce unless there's a micro bottoming pattern. But other than that, this is trading against some very key support right now. Back from the 13th of December, the last Fed meeting, okay? The little run up from the last Fed meeting. So this is at the takeoff point for the last little Fed meeting. What this also means, if we start trading below this, this traps all the longs from the last Fed meeting. Okay? Keep that in mind. So this is a very critical area to watch. So if this does hold, I'll be watching to see how it reacts. I will be actually watching this bar's high because it might be a %B buy setup for an aggressive thing with a bounce back, especially to about 16,709. So that's on a scalpy basis. Then I'll be watching to see how it reacts at the 4-hour rotation zone. If we really break below this area, the next key support is around 16,400. So you're into a clear path move to about 16,470, and then the next major support is 16,400 to 16,410. So that's where that sits. Happy New Year, Lauren. Thank you for tuning in. Good morning, all, Legion Reaver. Was that a video working for you now and everything, Legion? And I saw what you posted. I still have to look at it. Again, yesterday was really, really busy with the Futures Edge. Morning, Jake the Snake. Where are your intermediate and long-term signals at now with the market so high? Long-term still a sell. Intermediate is could be tipping into a sell pattern on. We need a couple key closes. The Dow is holding up, though. The Dow, which I'm going to get to next, is holding up. If the Dow starts breaking down, we could be getting an intermediate sell signal. Long term, remember, long term is not just based off technical, it's based off valuations. If we look at even the valuations, where is it? If we look at valuations, just the Schiller, we're 32. We didn't even, what was it? We dropped down to 28s last year. That's not a decent reset in valuations. Not even in the new market conditions. I mean, that's insanely high, and just a standard PE is 26, which we drop down to 22. This thing won't actually long term until we get down to something 18. Now, does that mean the market has to plummet to get there? No. You either have to have earnings really start to get revised up stronger, because then the PE will come down. But so far, we keep getting multiple expansion. We don't get earnings expansion, we're getting multiple expansion. So the long term won't shift yet, which means that doesn't mean you can't trade from the long side. But the long side is nothing to get married to from my perspective. It's tradable. Remember, like the %B buy on a weekly basis and a daily basis pretty much caught the 9-week run-up. Now it's trailing, and depending on your trailing time frame, it's where your stop is. And then it could roll into more of an intermediate sell signal. I think we're going to continue a pullback a little longer unless we possibly trigger that double bottom in the S&P. And then I'll be watching for the secondary reaction back up. But the Dow, look, it's still holding up. It's not even to the 62% retracement of the last run up from December 20th. So key levels I'm focusing on the Dow is 37,750 and then 37,660. Close below 37,660 keeps me in more bearish mode on the Dow. To the upside on any bounce is 37,930 and then 3,800. Russell, which is now getting Russell, which yesterday closing right at this 62.5, 2032.7. The close was 2033, but following through now, actually tapping that 87.5 and coming into key support. This is a very, very key support area in the Russell, especially down to where it's trading now. It's trading 2004. I'm really watching 2004, around 2000. I'm really keying if, and then last line of support is 1994. I'm starting to watch for a bounce pattern in here on the Russell with the dailies getting to the bottom. And that would be a bounce pattern for me. I'm going to flip this around too. Doesn't mean it's got to stop here, but I'm going to be watching then for the bounce pattern. Little key areas. Little key areas I'll be watching on the Russell on a bounce is about 2009 to 2010. And then roughly around 2019 to 2020. The VIX was interesting yesterday, popping up and then again just getting sold. Even with the down day yesterday, the volatility is still getting sold. Now, line in the sand, 1430 still. Watch today if it starts dropping below 1375 again, though. Keep an eye on that 1375 level today if it starts and we start getting some bottom pickers coming in. The DAX breaking the key support, 16,800 that I've been talking about. Now we're at the last little line in the sand for me. Last little line in the sand. 16,675 area. Bottom of the rotation zone. Going to be watching to see if we can get any bounce here and then where that bounce takes us. Because that's going to tell us this is where we're getting to these secondary reaction areas, and I'll be watching unless they get above these secondary reactions, 62.5s. I'll be watching for possibly bigger rollover plays again. The notes also breaking support. The next key area is the close from the Fed day, December 13th. That close is coming in at 111.28.5, also right near the bottom of the rotation zone. So we'll be watching to see if we get any support around there and then the bounce play on that, especially with daily cycles getting to the bottom. But those are for potential bounce plays. It's actually aggressive to the long side. It's safer than watch for another rollover play after the bounce. The yield, where I said I was looking for a return to 4, we're getting closer, 3.992. Then I'm going to be watching for some pretty significant resistance at 4 and the pullback. So things could be setting up for some more significant bottoming patterns and topping patterns in the notes, bottoming patterns in the yield. So now on the shorter term basis, it would be trailing mode on the shorter term basis going into this 4 area on the yield. The 10-2s starting to steepen again. Minus 25 is a major line in the sand. Keep an eye on that as it approaches it. We already talked about the dollar index. Crude into potential double bottom territory. Big reversal yesterday. There was a potential percent B buy. Did not hold above the high. And then closing well lower. Below the 62.5. Now spiking below the 75 and finding a little support there. But the only thing that gets me bullish on crude is now if this double triggers, besides any micro levels. Keep in mind on crude also, this is a very key area that I point out in the podcast from past. Watch where this week closes in relative to the weekly 200. That is very key. So keep an eye on that. Gold. My 2050, 2049. I'm paying attention to where this closes today. If we close below 2049, watching for a continued pullback. Does it shift the long-term positions? No. But yields are rising. And we could be trying to pull back and, again, fill a gap from the Fed day. So I'll be keeping an eye. That means I would not be aggressive to the long side at all. Yen, keep an eye on this now. Keeping an eye on this. Was watching this high 141.91. Yesterday's close 142. So this triggered the aggressive percent B buy. So watching this would be in very close trailing mode from my perspective now. But watching this, and we could retackle, especially with the dollar keeps running about 143.80. Euro closing below the rotation zone. Watching for some continued pullback here. We've also getting into a very key support level coming in at 108.95 area. So also just below that's the 92.5. So anywhere between this 50 and 62.5, I'm watching for a bounce, and then I'll be seeing how strong that bounce is, especially with daily cycles getting to the bottom. Weaker bounce, watching for another rollover play. Not much to talk about in the pound. Spiders. Keep an eye on the potential double in the futures. Right now, the spiders around 470.29 would still be in double territory. All right. Keep an eye on that. It would be a gap right here, so we'd be looking. It's a little sloppy because of the huge gap, but keep an eye on the futures one, and it's more of a reversal bar, but that would need, you'd be watching this 472.67. On continued down moves, we have major resistance on any bounce, so it's first 470.95 area. Then your supports 470.28, right? You know, we're just above that right now. Then 469.04, and then 470, 480. Oh boy, can't talk. 480, 467.82. I can't see either. 467.82 is a critical line in the sand. If it starts getting back above 471.75, then the gap fill would be the target. You can also use gap harmonics on that. The Qs, no potential double in there. Support. What? Geez, somebody reset my mouth. 398.85 is the next key level of support. In front of that is roughly 398.400, and we're trading just below that. So what are we looking at right now? Oops. On any rally, I would be paying attention to roughly about 400 on the open to 480. If it gets above 480, then you're looking for the potential gap fill is the next key level. Especially if that VIX drops back below that 1375 area. And that key gap fill is to 402.56. But if that VIX stays elevated, would not be looking to get overly bullish. Bitcoin. I talked about that on the podcast. Key closing level for me is around 40,300. You could just go off 40,000. It came down close that area this morning and holding up, but if it starts losing 40,000, why? Because we are in that bigger between the 50 and the 62.5, which is a major potential top zone. And yesterday, it had a fail breakout, so this could be a shake and bake pattern. See how it broke out to the upside even with a close and then strong reversal. So if we lose the other side of this horizontal channel, it will trap everybody who's been long since December 23rd approximately. So keep an eye on that. NVIDIA confirmed but not officially triggered on the daily. But And did not trigger on the 4-hour either. I didn't remember if it did or not, but I'm keeping an eye for a potential pullback. But we still have a bigger topping pattern potentially in place. That key area is 450. Remember, I brought up Apple, and then we'll get to Walgreens, Boots, and anything else. Apple, this is what I'm talking about. This yesterday was the lowest close since Friday the 10th. So everybody who's bought, essentially, unless you bought on the Monday, but everybody who's bought since Tuesday the 14th is underwater. Not to say we won't get a bounce in Apple, but I'll be looking on the, unless it's a really strong bounce, for rollover plays. The magnet price area is 180.79 to about 179.77. Sorry, I'm running behind. Walgreens, Boots. Okay. Don't know why that wasn't working. Walgreens, Boots, you have a mini double top going into earnings. So you 25.75 is the key level. It's valid on the 4-hour and the daily. And there's a gap left behind down here, so I'd keep an eye on that. If that does trigger. Other than that, the 200 is just above. So on any, it's coming into the 200 area to form this double. So you still have major resistance up about 27.50. You are welcome, Legion Reaver. Verizon. Good morning, Richard. Good morning, George. Let's just peek at Verizon, then I'm looking at the futures. Yeah, Verizon breaking out. This is a very key edge. Verizon trying to put in a longer-term bottom. Getting short-term oversold, overbought, so keep an eye on that. Some pretty key resistance, but as long as it keeps holding about 36, it could be potentially still long plays in Verizon. Let's take a look at S&P. S&P land. Double still in play, but going into the open, remember this 4-hour. We have 28 minutes left for it to close, but then the key area for any front run would be 47.78. If it's still in play. If it continues to drop, remember the double will be off the table. All right, with that, just going to peek in at the VIX too. Remember, 1375 area. Keep an eye on it. Still trying to hold just above it. All right. Thank you, everyone. And I shall talk to you tomorrow. Sorry, we did not get to Tesla. But breaking down, there's still a gap left behind. So the magnet price is 239.29. Should a Tesla keep dropping? With that, I'll talk to everyone later. Bye for now.